Hi everyone, this is Michael Benkiat. This is the Market Trend Advisory weekend video for August 6, 2022. All right, here's our disclaimer before we start, and we'll get right into it. So we really don't have a lot of change from last week. We're in a pretty strong uptrend, and you've just seen the index is acting really pretty well. We have market counts 5 out of 5. We have 100% exposure. It's no change from last week. We have almost no institutional selling days because of the strong moves up have actually wiped out almost all the institutional selling days that we had. And then we have a new development. We have the power trend is turned on for the S&P 500. So we're going to talk a bit more about this whole rally in a second, but yeah, it's looking pretty strong. Even though a lot of people they're not really happy about it, they'd rather see it go down, which is kind of a perverse way of looking at the market, but that's how a lot of people think of it. Maybe it's gone too far, too fast. That's arguable, but at this point, you have to respect the market. It wants to go up. So let's move on here to our investing strategies. We are at 100%. You can see that our market count 1X has been really outperforming the QQQ, buy and hold. That's down 19%. We're down about 4.5%. And for the SPY, not as strong, but still we're beating the SPY buy and hold, which is down almost 13%, and we're down 8%. And those are improving pretty rapidly now as the market continues higher. So let's take just another closer look. We showed this chart last week, but you can see we had over here, we had the initial rally attempt. We had our follow-through day on the 5th day. Immediately, we did get another sort of correction, and most people thought, well, that's going to be it, just like we've seen in all these other declines, low rally, and then we end up just making new lows. We had this powerful rally, of course, that really broke hard. And then, but since then, we've seen, 1, 2, 3, 4, 5, 6 follow-through days. In our system, we actually call them follow-through days, even though they're really accumulation days. This means that you're getting strong volume on a day that goes up at least 1.25%. In fact, the last day is really technically, because we're more than 25 days out, is an accumulation day. I've just written them as follow-through days here. But when a market that's doing this, coming off of a low, is showing a lot of power, and we've also broken above this kind of key level here, 12,320. We just kind of went straight past it and been rallying. So there's a lot of strength going on in the market that at this point we don't know. Is that that was at the bottom, or is we're sort of in a bottoming process? So we'll take a look at that in a second too. We have some things that we'll point out. For the S&P, I didn't mark it all up, but we do show that it's probably not as powerful. We haven't yet cleared this level here, but we do have the power trend that turned on, and that's a kind of a special mode where you have a number of things. You have the 21 day is above the 50 day for so many days. The 50 day is actually turned up, and just a few other things there. But usually when you're getting the power trend, you're in a strong uptrend, and usually it doesn't just turn around and go down immediately. Occasionally it does, but generally the power trend tends to continue going for a while. So it looks likely that both the Nasdaq and the S&P they're going to try to go for their 200-day moving averages, which is this declining black line. And over here we're maybe a little closer on the S&P, since it didn't go down as much as the Nasdaq. Now, a couple of things could happen. Institutions may, because we don't know. The big question is what's going on with the economy. Are we going to a recession? Or are we not? That's really the big question. So, it's unknown if we are seeing institutional support coming in here. These bigger days. We haven't had really any giant days since the follow-through day. You can see the volume has just been about average or below average in a couple days here. Now, we've got a couple more towards the end of this rally here, so that's good. But nothing really showing tons of power, big institutions just pouring back in. You could see it almost here, but it didn't last. They maybe a few of them like Fidelity and Contrafund and things like that came in, but the rest of them pushed it all back down. So we don't know whether or not they're going to be selling into this. This would be a place where institutions, if they wanted to lighten up, maybe they didn't lighten up over here, they would tend to lighten up towards this 200-day. And same with this one. This one's rounding out and flattening out a little bit more than the NASDAQ here on the S&P. So we'll see. In terms of the technicals, we do see a little improvement. You can just see the percentage of stocks above the 200-day. We're now about 33%, which is an improvement. You can see we were down at 17% down here. So you see it's gradually improving. We're finally getting more 52-week highs than lows after quite a few weeks of just really the lows outpacing the 52-week highs. And you can start seeing it here. We're never above 1 in the ratio. And we're starting to get a little bit of color in there, not just red. Same with the breakouts is starting to improve a little bit too. Now we are up around, when we get above 7%, 7.5%, it's generally where the NASDAQ starts to pull back when we're this high above the 50-day. It's 50-day moving average. So it wouldn't be unsurprising to see it, kind of have a little bit of pullback. But we seem to be, the market doesn't want to go down. We're getting a lot of bad news, and it's not going down. Now we're also seeing more stock breakouts happening too, which is but there's individual stocks are not acting all that well. There's a divergence between what they're doing in the indexes, and mostly because a lot of the power in the indexes, a lot of this move is, bottom fishing. There's the mega caps are back in vogue again. You're getting a lot of the beaten down stocks, the PayPals and Squares and HubSpot, of course the FANG stocks, and they're getting a lot of bids. And this could be short covering. So, but we're not, in just terms of the general market, we're not seeing a ton of strength yet. When 66% of the stocks are below the 200-day, it's not showing a lot of strength. And we're also starting to see, just pretty quickly, we're starting to see that more stocks are starting to fail. And we're just not getting a lot of great breakouts and a lot of new leadership in this rally. So, it's unknown yet. And let's go on to the sentiment. Now, sentiment's improved quite a lot. You can see the fear and greed. We were down in panic. We're actually neutral. Overall, we're at neutral. We actually have more bulls than bears again in the Investors Intelligence Report. The put call is well below 1, and the VIX is improving. It's getting down to, we might actually see a little bit of orange and yellow soon. It's been solid red for a long, long time. So, all in all, here's the big question. Is the bottom in? Now, there's a difference between a market that's bottoming and one that's just put in a low. So we may have put in the low over here. This may be the low, and there's a lot of studies that support that this could be the low, but we may not just be ready to rock it up. In fact, it would be probably unhealthy if the market just took off because it's just not a lot to support this just trying to go for new highs again, especially with what's going on with interest rates, inflation, and all that. So, but we may have put in the low here, but we may just be going through a process of backing and filling. And we may make a new low. We don't know. But at this point, it's kind of unknown what will happen. This could be the low. A lot of this is going to depend on what's happening with the recession. That's, if you look back on charts in the history of that, generally if the Fed is going to be hiking interest rates still at a rapid pace, we're probably going to see the market just kind of hovering, around here, maybe make a new low. But if the interest rate hikes are basically mostly over and they start acting more dovish, we'll probably start seeing this really go up a lot farther. Now there's some precedents. There's a market in 1990, I think in 1962, we kind of bottomed out. We came back down, didn't make a new low, and then October seems to be the bottoming month for many years. So we could kind of come up here and maybe decline down into October, and then if the market's inflation is not getting worse and the Fed's not getting more hawkish and bearish, then we could have, finally see a low in October, but it's kind of unknown. So, but right now the market's acting as if it's seen the worst of everything. It's seen the inflation and interest rates hikes and a recession. It's taken a bad news is good news approach to all the data. It's been all these reports that are coming out, the jobs report, CPI, PPI. We sometimes get an initial sell-off and then it just starts heading back up again. So it's in the process of discounting and it's climbing a wall of worry. That's what the market does. It's always looking ahead. So at this point, it's not seeing anything too bad. I mean, that's really what it is. It may not even be seeing a recession, which, there's a lot of data that supports that we could be going in recession. So, but we don't know. And of course, the market's not always right. And it may just be that at this point in time, it's not seeing the Fed's going to have to keep the pace of interest rate hikes going. But we'll see. So, again, the market's passed a lot of key tests. So it is quite bullish right now. And I think if the market goes up a little bit farther, we're almost technically in a new bull market, which is kind of odd. But we don't know. Is this a bear market rally or is this a new bull market? And I remember in the crash in 2020, within a couple of days, the Nasdaq was up 20% from the bottom. It was really so fast that I was like, we're in a new bull market, which turned into a really big bull market. But at the time, it just seemed unfathomable that the market's just going to take off. But remember, it was discounting a lot of things, but it was mostly discounting the fact that there was so much liquidity and money pumped in there. It was just good for stocks. Maybe not so much good for businesses, but for stocks. So anyways, the key tests that we've passed, and you have to keep all this in mind, we had these advanced decline volume breadth thrusts, hard to say. We haven't seen that. That's a very good sign. And we haven't seen any on the downside yet, which would be a probably pretty negative sign. So we did see that the market probably bottomed out over here, just from terms of also sentiment and some technicals and oversold. And then we started seeing this breadth thrust go over there. We've had the 6 follow-through days, accumulation days in the NASDAQ. There's almost no institutional selling days. That's a great sign. And we had extremely bearish sentiment at that low. We're making higher lows. We're above the 21-day, the 50-day. S&P's in a power trend. And, all in all, the earnings it's not better than expected. We're kind of doing better than feared at this point. So, but it's been something. There's been a lot of gap ups on earnings, but of course, there's been a lot of gap downs. But I think all in all, the earnings are not coming in as worse than expected. So they're kind of at the better than feared. So that's kind of wraps it up here. For the final thing, though, is just, we don't know. Is this the new bull market or is this a bear market rally? I showed this chart last week. This was the 2000 to 2002 plunge of more than 80% in the NASDAQ. And you can see within this bear market, there was a lot of pretty big moves. There's 50% rally that went on that it just petered out. And then we had a final 36% rally, but that was the bottom there, about 1100 on the NASDAQ. So we just don't know. It's just going to depend on, the market's just going data to data, report to report, every day, just kind of absorbing all that. But a lot of it's going to be, has inflation peaked? There are a lot of signs that maybe it has. We've seen price of lumber and other commodities are starting to come down. Oil has come down. I think it was off 30%. Home prices may be starting to moderate, as well as rents, a bunch of other things that go into that. So the market's looking at all this and is trying to figure out what's going on. Now, it does seem unlikely, also because we went into a big bubble, in the market the last couple of years. It seems unlikely that in just, 6 months, it's over. 8 months since we really started the bear market in January. So it seems unlikely that just given what's going on now, the fact that we have a recession possibility, rising interest rates going up quickly, just a lot of different things that it's just all done in a few months seems unlikely, but anything can happen in the market. So at this point, I think you just have to go with the flow. The market wants to go up. we're not getting a lot of strength beneath the surface, really, except for the mega caps and a lot of the beaten down tech stocks. Not a lot of leadership. So in terms of individual stocks, not really the great environment yet. In our stock pick service, we're still in red, showing its sort of caution, and we have just very minimal invested. And even in this service, we have 15% for individual stocks or non-indexed ETFs. It's just not working. Now that's not necessarily bad. It's just that we could be just in the bottoming process of coming out of a bear market, or we still could be in a bear market. It's unknown. But stocks sort of if you look at a lot of traders buy things out of like a cup with handles, a very common pattern. A cup like this, there's a little handle sometimes, and then you're up. But if you look at the market like this, if this is the bottom, we're just now coming up the right side of this kind of a pattern. So it'd be normal to even come up a little bit more, retrace more of the previous decline. I know there's Fibonacci numbers that some people use. You could calculate where the expected Fibonacci number retracement would be, and then maybe it backs and fills, and almost like forms a cup. That's one way to look at it. Or this is just another leg up of another, waiting for another leg down. So, but all in all, I think the key is you have to keep an open mind. I wouldn't be super bearish or super bullish. I mean, we're in a bullish phase of whatever larger phase we are in the market, and you just go with the flow. I mean, we could have a very good trading rally going on right now, just like some of these here. This was a tradable rally. You can make a lot of money in this rally within this bear market. So we keep that on. I mean, all of our signals for our service, just coming back here. I mean, it's bullish. I mean, this is about as bullish as it gets. Solid green. Market counts 5 out of 5. We have the power trend, so let's probably go. Oh, actually, this should say 5 out of 7. I'll have to correct that because now we can go up to 7 on the S&P. The Nasdaq hasn't quite because it had a couple of days. It dipped back below 21. Hasn't qualified for a power trend, but it looks likely, unless there's a big plunge, that this will go into a power trend this week, and then we'll have even stronger uptrend going on. Okay, so that's about it for this week, and again, we'll be back next week. Okay, thanks.